Right now, the stock market is quietly setting up some of the biggest opportunities we've seen in months, and most investors have no idea what's coming next. February isn't just another month on the calendar. It could be the moment when a handful of powerful stocks begin their next major move higher. Today, I'm breaking down 5 stocks you absolutely don't want to ignore right now. Stocks tied directly to AI, data centers, next generation energy, and massive demand that's already reshaping the market. If you're serious about building wealth and staying ahead of the crowd, you're in the right place. Before we jump in, make sure you subscribe to StockOra and turn on notifications. We break down market opportunities like this every week in simple language without hype, so you can make smarter decisions. And stay with me till the end because the final stock on this list connects everything together and could surprise you. Let's start with the stock that continues to sit at the center of the AI revolution, and that's advanced micro devices. AMD has been through a classic market cycle over the last year. Huge excitement, strong expectations, then a long wait and see phase that caused the stock to pull back. But what many investors miss is that nothing fundamentally broke. In fact, the long-term story has only gotten stronger. AMD is rebounding now because demand for GPUs and AI computing power isn't slowing down. It's accelerating. Data centers, cloud providers, and AI platforms are all competing for limited supply. AMD's upcoming MI series launch is a major catalyst, and even before that launch happens, the market is already positioning for what comes next. The key thing to understand here is supply versus demand. Demand is so strong that both AMD and NVIDIA are essentially selling everything they can produce and still can't fully meet global needs. What makes AMD especially interesting is that analysts may still be underestimating just how big this next growth phase could be. GPUs are already sold out far into the future, and once new products begin shipping, revenue doesn't just increase slowly, it ramps fast. Early deals are already in place, meaning revenue starts showing up almost immediately after launch, then compounds quarter after quarter. Now, if you're wondering about timing, this is important. The official launch is expected later in the year, but markets don't wait for events to happen. They move ahead of them. Earnings reports, guidance updates, and even hints about production progress can be enough to push stocks higher. That's why many long-term investors build positions gradually, adding on pullbacks and confirmations of strength instead of trying to time a perfect entry. AMD isn't about quick speculation. It's about positioning yourself in a company that sits at the heart of AI infrastructure. And that theme continues with the second stock on our list. The next name is Amprius Technologies, and this is a very different kind of opportunity. This is not a mature megacap. This is a long-term growth story that's still early in its life cycle. Amprius operates in advanced battery technology, and their products offer lighter weight, higher energy density, and better performance than traditional batteries. That combination matters more than ever as industries demand more power with less space and weight. Last year, this stock surged as investors started pricing in a powerful future. Then the market cooled off. News slowed down, sentiment faded, and the stock pulled back sharply. But here's the key point most people miss. The business outlook didn't collapse. Production capacity expanded, manufacturing partnerships increased, and the path toward profitability became clearer. This pullback wasn't the end of the story. It was a reset. And now, the stock is rebounding as investors refocus on what actually matters: execution and demand. Analysts are already pointing toward new long-term highs, potentially even before the next earnings report. This is absolutely a long-term play, and that means volatility comes with the territory. You'll see sharp moves up, sharp moves down, and emotional swings in between. But as long as each pullback holds at higher levels than before, the broader uptrend stays intact. That's how real growth stocks behave in their early years. The risk here isn't about demand. The risk is execution. But so far, Amprius continues to prove that its technology works, that customers want it, and that orders are coming back for more. That's what long-term investors look for. Now, if you've made it this far, drop a comment and tell me which stock has caught your attention so far. Engagement really helps this channel grow, and I read your comments personally. Coming up next is a company that doesn't get as much mainstream attention, but plays a critical role behind the scenes of AI infrastructure. This is where things get really interesting. The third stock on our list is Credo Technology, and this company operates in a space most people don't think about, but AI simply cannot function without it. Credo doesn't make GPUs and it doesn't build data centers. What it does is connect everything together. High-speed, low-latency data transfer is essential for AI workloads, especially as systems grow larger and more complex. Credo specializes in advanced connectivity solutions, particularly optical technologies that allow massive amounts of data to move quickly and efficiently between GPUs. This becomes even more important as AI moves beyond training and into inferencing, which is the next major phase of AI adoption. What makes Credo stand out right now is the disconnect between fundamentals and price action. The stock had an incredible run last year, climbing several 100%. Naturally, investors took profits. That created pressure on the stock even though business performance and analyst expectations remain strong. In fact, the stock is currently trading well below even the most conservative analyst price targets. This kind of setup often creates opportunity. When price pulls back but fundamentals stay strong, markets eventually realign. The timing is always uncertain, but catalysts like earnings, guidance, or major customer updates can quickly change sentiment. For investors willing to handle some risk, this is the type of situation where patience can pay off. Now let's shift gears to energy, because AI doesn't run on optimism, it runs on power. And that brings us to Bloom Energy. Bloom Energy is one of the most fascinating stories on this list. It's not a new company, but it's found new relevance in a world struggling to supply enough electricity for massive data centers. Traditional power grids often can't keep up, especially in remote or high-demand areas. That's where Bloom steps in. Bloom uses fuel cell technology to generate energy efficiently and quickly without traditional combustion. This allows for fast deployment, reliable output, and a cleaner energy profile compared to conventional fossil fuel solutions. For data centers that need power now, not 5 years from now, this is incredibly attractive. The results speak for themselves. Revenue growth has surged, analyst coverage continues to expand, and the stock has already set new all-time highs. Yes, the stock is up significantly over the past year, but momentum isn't slowing. In fact, revisions to earnings and revenue expectations continue to move higher. Bloom is uniquely positioned to fill a gap between today's energy needs and tomorrow's long-term solutions like nuclear. That doesn't mean the company is risk-free, but it does mean it's operating in exactly the right place at exactly the right time. And now we come to the final stock, the one that ties everything together, Applied Digital. Applied Digital is essentially building the physical backbone of AI. The company has been transitioning away from Bitcoin mining and fully embracing AI-focused data centers. This shift is already paying off. Revenue growth has been explosive, demand for services has surged, and new campuses are coming online faster than many expected. What's important here is that this isn't just hype. Applied Digital is executing. They're building, leasing, expanding, and locking in deals that support long-term growth. Each earnings report reinforces the story, and the market has responded by pushing the stock to new highs. Some investors hesitate when they see stocks already up several 100%. That's understandable, but strong stocks often stay strong when fundamentals continue to improve. The recent breakout isn't random. It's the result of confirmed growth, rising demand, and expanding guidance. Applied Digital sits at the intersection of AI, energy, and infrastructure. Without companies like this, none of the AI revolution works at scale. So here's the big picture. February isn't about chasing hype. It's about recognizing where demand is real, where money is flowing, and where long-term trends are accelerating. These five stocks represent different pieces of the same massive shift. If you found value in this breakdown, hit the like button, subscribe to StockOra, and share this video with someone who cares about investing. And let me know in the comments which stock you're watching most closely, or if you want a deep dive on any of these names. This is StockOra, and I'll see you in the next one. The risk here isn't about demand, the risk is execution. But so far, Amprius continues to prove that its technology works, that customers want it, and that orders are coming back for more. That's what long-term investors look for. Now, if you've made it this far, drop a comment and tell me which stock has caught your attention so far. Engagement really helps this channel grow, and I read your comments personally. Coming up next is a company that doesn't get as much mainstream attention, but plays a critical role behind the scenes of AI infrastructure. This is where things get really interesting.